Well, it's not on the angle, it's above it. So a couple days later, it takes a swan dive and it goes down to 35. Now it's below the angle, and then it comes up a little, and maybe on the 40th day, it's exactly $40 different than the origin, and it's exactly on the angle. At that point where it touches the angle is where you get a potential major change in trend. So the ones that work the best are usually the natural time increments, like 1 point per day, 1 point per week, and 1 point per month. And on our long-term charts, we want to really keep track of these type of angles. These are very easy to put on, and that all we have to do is we can go out exactly 1 year on our chart. And so, for instance, on this caterpillar in early March 2nd or so, there was a low. We go out 1 year into the future, and we just draw a vertical line. And then we just find what that low price was. And a 1 point per month would be 12 months to a year, so it would be $12 higher. So if the low here was, let's say, $20, it would now be $32 over here, and we put a little dot. And then this is an angle of 1 point per month. Same thing is true on a weekly basis. 52 weeks in a year. So we would take our price of 20 or so. I think it was 20 3/4 actually. But about 20, and 52 later, it would be like 72. So we put a dot here. Now note, these are pretty good trend lines. Sometimes they touch it exactly. They hit it and go through it. Exactly here. And it is on these exact touches where you're getting this time and price square out, because all along this angle it implies we are over an exact number of weeks and we are up an exact number of points where they are in equilibrium, and that equilibrium is where they can square out and reverse a trend. So oftentimes they won't square out and do much. They'll go 3 or 4 days right on it, and then they'll rocket off it. But a lot of times a square out and trend reverses the market, or it accelerates a new trend through the other side. There are other rules we'll get to in a moment about time cycles, that there are certain harmonic time cycles that will come out like 3 or 4 months later, 5 months later, 1 year later. And if you're on a trend line on one of those time cycles, it will reverse the market also. We can also do it in a downtrend. We can take the exact same slope as this uptrend line and reverse it, or we can go over so many weeks and down so many points. And we can do things like square outs, where this 1 point per week trend line comes down, and where it intersects the low, we're looking for some kind of square out. And that's what this big low was supposed to be over here. And I also took a parallel line from our previous lessons here. That's what this dotted is. I took a parallel line, started it under the top at the level of the low over here, and we find out that this 1 point per week exactly caught our bottom in here. Then it turned out to be a midpoint of a break here, and turned out to be the topping area over here. So this is the weekly and monthly angles, and we find that we can put them on a very strong stock like Google, which has a lot of momentum. We may have to do multiple points per 1 per week, 2 per week, 3 per 4, 5, 6, 7, or 8 per week often. And again, it's only when they really hit the angle are they exactly squaring out. So here's an exact hit, and it changes the direction. Coming down here to an exact hit, it changes the direction. Goes on up here to an exact hit, changes the direction. Other times they won't change, they'll just creep along it. But most of the time when they hit one of these angles, there'll be a harmonic and a reversal. And it doesn't do it all the time. You'll see many times it's not on the angle at all. So the only time you really have to watch them is the 1 day over here, and the 1 day over here, and the 1 day or so over here, because it is on those pivots where they hit the angle exactly where you're going to find your reversals of a long-term weekly trend line. Now remember, we started talking about the subject of time and price square outs, where we can draw a trend line, and any time we're exactly on the trend line, there is a harmonic proportion of a certain amount of time and a certain amount of price, and at that equality, you will get a change in trend. The problem is that most times the proportionate scaling factors in the way we draw our time and price are not easily convertible into a 1 point per week or 2 points per week or day or month. Often they're oddball numbers. Maybe it's 1/8 of a dollar to 1 week, or 17 cents to a certain time period. So then we have to rely on geometric patterns to try and find out what these proportions are. And this is one of the big keys to scaling charts, and especially working with charts that are not scaled properly. So we can make adjustments for this. So for instance, here's a weekly chart of Caterpillar. And we know from this first leg up that this top has to be due to a time and price square out. That's just the way it works. And I've gone ahead and I've set my 4x1 angle. I put a little square box around this thing. And at the 1/4 point of the square, I drew my angle up here for the 4x1. We see the 2x1 angles here, and it has a perfect fit down to 50% of the box on the angle. And the end of the box is over here, so this is a true 45-degree adjustment. And then I made a bigger box where one of the small units is the size of our big box, so it's really 16 times as big. And then I took my cycle finder tool and put little cycles on here the size of one of these units. And these won't always be quite exact. See, they miss a little bit over here because it may be an oddball, so many units of time. Maybe it might be 37 days to a price or something. And it may be hard to get the computer to exactly break them down into even intervals. You could do this using minutes or something very precisely if you used a hand-drawn chart. But for most of our purposes, an approximation will work very closely. Now we see when we do a scale like this, we see our time and price harmonics working pretty well. We see the time cycles hit, the market turns, here's another time cycle, and it breaks out of this 4 or 5 week consolidation. And it's gravitating to both an angle and the upper leg of this next box, and at the end of the first box. So this is a major square out, and then it has to go down for 5 or 6 weeks. This is a weekly chart into our next time cycle where there's a big spike, and then it fails, and then it goes on up, and where the next cycle over here hits, it fails, and it looks like it's gravitating down to the angle over here, possibly at the end of the second big box, which is at the end of July. And this year being 2010, we are reminded of the 12-year cycle, which was July 20th of 1998. There was a big panic and collapse. So there should be some kind of 12-year harmonic anyway in the third week of July this year. So the question is, will it be on the trend line, or will it have to break the trend line and come down into this area? But we can see in a method here of getting some time and price square outs on individual charts. Another chart we can use here is Amazon with the same type of approach. Here's our first weekly high swing, and we turn this into a 4x1 angle. So we have 4 boxes, and the time unit, see, it is a rectangle because a 1 unit up, basically the 1-to-1 correspondence, the 1 unit up here is this full time price mechanism. Even though I've divided it into 4 units, the 1 unit is here and the 1 unit is over here. So this is 1 unit of time and this is 1 unit of price. But because of the scaling factor, it looks like a rectangle. But on a 1-to-1 basis, this particular trend line squares out, and this is a squaring factor. So we see too that there's a big turn on our angle, on the 2x1 angle, and at the 1x1 angle that comes up through the corner of the square, there's also an angle and an intersection of our next box up, which times it perfectly. And this continues on up, and it times it over here too. We can also see at the center of this big box, there is a cycle turn, and the market's been drifting on down along our support angle, and it hits this time cycle, turns up, and from this low right here on an angle, it goes on up into the end of the box at an angle, pulls down to a time cycle, goes up here and explodes up, almost hits its head on the angle here, comes down. And again, the question is, will it break this trend line going into the end of the next square, or will it gravitate up into here? But we're beginning to see at a glance now how important our angles can be, that there are certain time periods where they like to gravitate to the angles at certain times. So this gives us a great deal of information of where the turning points could come from. And all this information was gathered from this initial swing being set to a time and a price unit, and setting into a 4x1 angle, and setting up a grid system. So this can also be done on shorter term time frames. Here's a 60-minute E-mini with a big breakdown we've seen before. And in this case, I've taken the first plunging low, the actual low was here, and I've made the first little square around it. And then I made that first little square the square root of a much bigger square, 16 times size bigger, but 4 times bigger. And then what I did is I went over to the 4x1 here and put on some cycle finder bars to measure these things over. And here again, they'll be off a little bit because it's going to be very hard to get even integer numbers to tie in exactly with whatever fractional time period this is on an hourly basis. You know, maybe it's only 57 minutes or something as one unit, but we have set it up geometrically, so it will give us an approximate idea. Then we can put our angles down. Instead of the 4x1 angle here, I used a 2x1 and a 4x3, and then here's the 1x1 primary angle, and here's a 1x2 coming down over here. And we can see in the big picture, if we step back a little bit, the center of our box is an area here where the angles intersect, and it gravitated to the center. Then it breaks down, going to the 3/4 of the box over here. It overshot it a little bit first with momentum, bounced up, came down to an angle here. And the only question remains now, will it go down to the quarter of the box or rally up to here? Now usually the boxes represent a completion. So if we set it to this first little rally here, then probably at the end of this box it might complete the wave pattern. But sometimes they do complete early. So we'll find out at this vertical red line, the next turning point, if they're going to turn up and head to here, or if they're going to turn down and try and make a double or triple bottom. Now sometimes you may not have a tool like that little square, and maybe on your particular system you can't do it. In this particular chart package, they don't have a Gann square, but they do have a rectangle tool. So what I did, and this is a very compressed hourly chart to show you a complete hourly chart correction I wanted to use. The first little low here is set up with a rectangle. I take the little rectangle tool, often these things will draw a rectangle. After I had the rectangle set here, I duplicated it and made a parallel rectangle, dragged it over, and set it right next to it. Then I duplicated that, dragged it over, set it next. So what we have here is 4 individual little rectangles that I made out of the first. So now we have our little box, like in the previous slides, that you could make individually if you had to. I want to do this because, remember, this is an oddball time and price. The price is this amount of distance down, and the time is this amount of distance over. So when I make 4 of these, I then want to make 4 of these going down. The best way to do that is to take a lines retracement type tool and set 25% of it to this low, and then 50% 3/4. And this would be 4 of these boxes lined up. Just throw a vertical line at the end of this one. Then I can draw my 4x1 angle through the corner of the box, and where it intersects the big bottom down here should, in theory, be the end of my move. And often it's this little fractal crash coming out at the end of the tiny rectangle is often repeated with this little fractal crash coming out at this triangle. Now in this case we had another big break, and this one we did not. It held the lows perfectly, and the 1x1 bear market angle came down. It hit its here, and it hit its head right at the 50% and broke out and continued up until the next top was where the 50% angle came down